Good morning, Andrew Cooper here, Advice for Living Financial Planning from Diamond Creek, although today I'm actually sending this to you from Burleigh Heads. We're having a few days off, as most of you will know. I did want to do just a quick video to reassure people about what's been going on the share market, both in Australia and overseas, over the last few days. The key issue is that this is a market correction. I've been talking about it in my videos over the last few months. Prices in the US and also in Australia have generally been inflated. The market tends to get ahead of itself, and so generally what it does is it overcorrects on the upside and overcorrects on the downside. So it goes ahead too quickly and then it comes back too quickly, and that's pretty much what's happened over the last few days. The important thing I think to note is that this seems to be just a correction. It's not a bear market. It's not the beginning of a depression or any of that sort of dramatic stuff. Of course, the papers are full of it because there's no circulation in good news. It's only disaster. Disaster makes better press. So that's why the markets are all shock horror. And certainly I saw the front page of today's Australian. Today's Herald Sun is of course more concerned with the Cox Plate, which is probably a good idea. But so the market, not great, but interestingly, the American market overnight recovered at least half of the gains that it lost the previous day. And indeed the NASDAQ, which is their technical stocks, recovered more than half. So I think it's just an issue of volatility. As I'm recording this, the Australian share market hasn't opened again for Friday, but the indications are there's a futures thing that tells you where it's going to go, and it's going to open up and looks like recovering at least most of what was lost the day before. So as I say, it's a correction that I've been talking about for a while. So I'm cautious, but I'm not worried to any great extent. I suppose the things that are causing it on the Australian share market very quickly are that property market is down, and so as a result, bank lending is down, and the four banks and of course AMP as well make up a big proportion of the Australian market. So if they're down, then generally the market's going to be down. The other thing, of course, is AMP had a horror day. That had nothing to do with the share market sell-off. It's just that they're selling their insurance company, and I think generally people don't know where the future is for AMP, and certainly I've been of that mind for quite a while. I cannot see where AMP are going to just recover from. The second thing, of course, is the Royal Commission has been putting pressure on the banks, and so it hasn't been a good time for the banks. Also, of course, the miners make up a big proportion of the Australian share market, and at the moment, iron ore prices and so forth have generally been lower but are increasing, so we would expect that to improve. On the whole, for the Australian share market, I'm expecting it's probably not going to be great for the rest of the year, but not in a panic way. It's just not going to be a great year. The other thing, of course, is October is generally not a good month for the share market. I don't know why. Each year it generally isn't, and I know I've said this before in my other videos. So I would expect the Australian share market could come down even a bit further. It's probably running at about, I think, 56.50 or something. It might come down another 50 points or something, maybe 5,600. And so, as I say, don't expect great returns this year. I suppose it's one of those things. Over the last few years, there's been terrific returns from the Australian share market, and so what's happening is as I said, got ahead of itself, as did the US market, and so it's just come back a little bit. I should say the underlying factors are still terrific. Unemployment is very low, business profits are good, and of course the thing for the Australian share market is, of course, even if the market is flat, Australian shares pay around 5% dividends each year. So even if you're not getting growth out of it, you're still getting a 5% return. So from that point of view, whilst I wish it was better, I'm certainly not panicking. In the US market, the sort of things that are driving it again are this trade war with China that is, even though of itself it's probably not huge, what it's having an impact on is that the Chinese had a trade surplus with the US. So what they were typically doing with that surplus was actually buying US government bonds. Now, because of that trade surplus, that trade surplus is lower. So they're not buying US government bonds. They were the biggest buyer of US government bonds. And so because the Americans got a trade, have got a budget deficit, they were supporting this with government bonds, but of course the Chinese are not buying them now because their trade surplus is lower, and so as a result, the US federal government, the Federal Reserve, is having to push interest rates up in order to get buyers. So interest rates go up, as I've said before. People that are in overpriced shares start going, well, we can get better returns from government bonds, so I'm going to buy some. So I'll sell out of shares. So we're seeing this sell-off, and then of course the automated sell downs, which are computer-based. When prices drop below a level, nobody looks at it and just they sell down even more. So from that point of view, as I said, it's frustrating. But I don't think it's, as I say, it's a correction in the market. It's probably not going to be great for the rest of the year, but the fundamentals are okay. So I'm not recommending any sell-offs at this stage. It's the same sort of situation. Like if house prices fall, you don't sell your house. So it's the same thing here. Share prices are falling. Don't sell out and realise the loss. Keep it, as I say, you're still getting, Australian shares still pay 5% rent, as it were, so keep your 5% rent, don't sell a house. So, as I said, I'm concerned, but I'm not panicking. Anyway, so we're still available. Flick us an email if you've still got concerns, and we'll certainly be watching the markets. Thanks.